U.S.-China trade war escalates as miscalculations deepen facing unprecedented tariffs imposed by President Donald Trump. China found itself at a crossroads with two stark choices: plead for leniency from the United States or fight to the bitter end. As history now shows, China, under President Xi Jinping, chose the latter. In retaliation, Xi unleashed what analysts have termed a nuclear avocado response, a bold but self-damaging counterstrike that has accelerated China's economic decline. So, what exactly unfolded, and how did the U.S.-China trade war reach this critical juncture? At its core, the conflict stems from mutual misjudgments and flawed assumptions by both leaders about their adversary. President Trump long believed China would eventually negotiate and strike a deal. His reasoning, rooted in a businessman's calculus, was straightforward. China's economy, significantly weaker than America's, could not afford a self-destructive standoff. In 2024, China's GDP stood at roughly 65% of the U.S.'s, down from a peak of 77% in 2021, with the gap widening. Moreover, China's economic structure remains fragile, over-reliant on exports, with low domestic consumption, a shaky capital market, and a brittle social safety net. Such an economy, Trump argued, could not withstand prolonged shocks. Yet Trump overlooked a critical factor: Xi Jinping's unique political needs. As U.S.-China tensions escalated, the crisis paradoxically strengthened Xi's grip on power. Domestic rivals, fearing the consequences of upheaval, hesitated to challenge him, allowing Xi to consolidate control. In this sense, the worsening U.S.-China standoff became a political asset for Xi, enabling him to rally nationalist sentiment and deflect internal criticism. Some draw parallels to China's decision to enter the Korean War in the 1950s, a move that defied expectations given its weakened state after civil war. Despite its economic and military inferiority, Mao Zedong's China confronted the U.S., securing Soviet support and laying the groundwork for industrialization. However, today's context differs sharply. Unlike the 1950s, when China's survival hinged on Soviet backing and a favorable international environment, Xi's current strategy lacks a clear path to similar gains. His push to reset U.S.-China trade to zero, coupled with the absence of a viable anti-U.S. tariff alliance, reflects a muddled and contradictory approach. Xi's potential to benefit from this crisis offers one lens to understand his actions, a logic unique to China's political system, where what seems irrational globally may serve individual leaders domestically. Trump, shaped by his experience in American business and recent political ventures, underestimated this dynamic. His strategy relies on leveraging superior U.S. strength, believing that overwhelming power would dictate the outcome regardless of China's maneuvers. "I hold the cards," Trump has implied, confident that China's weaker hand would force capitulation. But Xi, too, misread Trump. He viewed the U.S.'s open society, its free speech, diverse interests, and limited government as vulnerabilities to be exploited. Xi believed China's centralized system could outmaneuver America's democratic weaknesses, underestimating the resilience of consensus-driven societies in protracted conflicts. Democracies, while slow to decide, often commit fully once resolved, making reversal difficult without a decisive outcome. In contrast, China's system allows Xi to pivot freely, escalating or retreating at will, but risks overreach when facing a determined democratic adversary. Trump's tariffs have achieved a key goal: isolating China. Most nations, granted a 90-day tariff reprieve, have watched China's economy falter under U.S. pressure, reducing their incentive to align with Beijing. With no immediate need to escalate tariffs further, the U.S.-China conflict is poised to shift to financial and diplomatic arenas. The rapid pace of the trade war suggests these new battlegrounds could unfold with even greater intensity. As WorldView Today has warned, buckle up. Historic turning points are imminent. Recently, speculation has swirled about Xi's nuclear avocado retaliation, particularly China's reported sale of $50 billion in U.S. Treasury bonds since April. Holding over $710 billion in U.S. debt, China may continue this sell-off to disrupt Trump's plan to refinance $6 to $7 trillion in U.S. debt at lower rates. Dubbed a nuclear financial weapon, this tactic risks backfiring. Selling U.S. bonds could devalue China's own $3 trillion foreign exchange reserves, 60% of which are dollar-denominated, threatening the yuan's stability. A failure to defend the yuan could trigger capital flight, rendering Chinese investments worthless. Proponents of this strategy argue that, despite the cost, disrupting Trump's first-year agenda, particularly his tax cuts, could amplify public discontent in the U.S. as prices rise. China believes enduring 2025 is critical, hoping to erode Trump's domestic support. However, the U.S. holds more ammunition in a financial war. American measures, such as delisting Chinese firms from U.S. stock exchanges or seizing Chinese assets, could inflict disproportionate damage given China's larger asset exposure in the U.S. As the trade war evolves, China has shifted its diplomatic focus. A secretive April 8-9 meeting, dubbed the Central Neighborhood Work Conference, signaled a retreat from Xi's global shared human destiny vision to a narrower shared neighborhood destiny. Abandoning the ambitious Belt and Road Initiative, China now seeks to consolidate influence in Southeast Asia, starting with visits by Xi to Vietnam, Cambodia, and Malaysia from April 14th. Vietnam, with its economic potential and military clout, is a linchpin. Yet, Vietnam's reliance on U.S. markets, 37% of exports, versus 16% to China, and historical tensions with Beijing, including conflicts in 1974, 1979, and 1988, complicate China's outreach. Trump's tariffs aim to lure manufacturing back to the U.S., echoing President William McKinley's late 19th century policies. Critics argue high U.S. wages deter factory returns, but history suggests otherwise. In McKinley's era, U.S. wages exceeded Europe's, yet high tariffs and a vast consumer market drew investment. Today, America's $19 trillion consumer market, 69% of GDP, dwarfs the EU's $7.8 trillion and China's $6.7 trillion, reinforcing Trump's bet on consumption as the ultimate trump card. The U.S.-China trade war challenges conventional wisdom. While some dismiss Trump as economically naive, his real-world business acumen contrasts with theorists reliant on academic models. As WorldView Today observes, the clash tests who truly understands wealth creation. Viewers, what's your take? Is Trump's strategy visionary or reckless? Share your thoughts below, and if you found this analysis compelling, support WorldView Today with a like, subscribe, or a virtual coffee via the link provided. Stay tuned for more insights as this historic saga unfolds.